JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 15th of February 2022. So yeah, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So check us out here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225, just to see what's happening. And basically, yeah, we are drifting lower. We broke below this 26,955 territory. I spoke about that level, and yep, we remained below it. So for now, I mean, it seems that yes, we could drift a bit further south if we do stay below that hurdle. So simple as that. Basically, for me at the moment, that's what I'm going to stick to. If we do stay below that hurdle, then I'll continue aiming lower. If we jump back up here and let's say climb back above these 27,085 zone, somewhere around here, then well, maybe a bit of a kind of a push higher here could be possible. So, but again, we'll pick up on that later if we do get that move. But for now, keeping an eye on, like I said, on this hurdle here, this 26,955 zone. If the index stays below it, then further declines could be possible. Hong Kong Seng Index, yep, looking at this picture here, you can see that the index is also drifting lower. However, as I mentioned to you yesterday actually, recently, that basically we could see a bit of a retracement here. However, we do still have this upside line taken from the low of the 6th of January, which could provide some support. So in other words, for now, I mean, you could still see something like this happening, basically where we could see a bit of a curve. I'm not saying that this is exactly what's going to happen, but we are still above this upside line. So in a way, even if we drift lower, if that upside line stays intact, then well, like I said, we could see that nice little reversal here back to the upside. Jumping into German index DAX. So yeah, here we have an index which is quite interesting, and was quite interesting in its yesterday trading performance here and trading activity, because initially we dropped nicely to the downside, and I talked about this a lot, and I said that if we drop lower and we drift below this highlighted territory and stay below it, then yes, this could be a good confirmation of a possible kind of break of the neckline, the so-called neckline here of this double top pattern, or we could, we could lead to a drop below the below this range. So, and yeah, more maybe selling could come in. However, as you can see here, we got that drop, yes. The cash index is currently sitting at around 15,050, something like near this area, near the lower side of this range, near the so-called neckline. However, I'm being very careful for now because I want to see if this is not going to end up being just a false breakout, basically. And what I kept on saying to you previously, that we always need that good confirmation. The confirmation normally for me is something like a body of the daily candle remaining below or above a certain level. And in here at the moment, yes, we are testing the lower side here, this lower side of the range. However, can we actually drift lower? I mean, that's going to be a good one. That's going to be a good question to see if, you know, if this happens. However, at the moment, I mean, the fact that we got this false breakout and the index yesterday kind of drifted nicely, strongly back to the upside, this gives a bit of hope for the buyers, guys. So anyway, for now, just like I said, I'm keeping an eye on this. This could be quite interesting today, going into today. Another thing to keep in mind, we need to get rid of this upside line, no longer needed, and for now we're just going to stick to some of these levels. And for example, for me right now, let's say to maybe consider the upside, I would like to see a push somewhere above this hurdle, above the 15,158 zone, and then yes, we could maybe consider a bit of a larger correction here to the upside. However, for now, just keeping an eye on this hurdle, and yeah, let's see how that's going to play out. It's quite interesting. We are at a very interesting spot, I would say. So keep in mind this lower side of the range. If we somehow eventually break that again and we stay below it, then, well, I mean, maybe this is when we will start looking at some lower levels. But for now, we need to remain careful. NASDAQ 100. So yesterday I talked about this index, and I said that we might see maybe a bit of a corrective here, move higher. We did get that. We did curl up here, as you can see. Yeah, I mean, we pushed higher. We got a hold up near the lowest point of October here, and then we drifted back down. The cash index is currently sitting at around, let me just quickly double check that, around 14,300 zone. So basically nicely above yesterday's close, however still below this whole resistance area that I mentioned to you. So in other words, still keeping an eye on the same idea. We might see maybe a bit of a retracement again here. If it holds, this resistance area holds, then yep, another slide could be possible. But as I said with the German index, again, it's quite interesting that we had a strong reversal yesterday in DAX. Hong Kong's Seng Index is also still kind of, let's say, I wouldn't say negative, and that's why, you know, be very careful. Let's see, maybe this whole sentiment will roll into US session. For now, I'm just keeping an eye on this. If the index starts climbing nicely above this 14,471 zone right here, the highlighted one, that's when maybe we could consider a bit of a larger correction here to the upside. Now, some of you might have something like this as well on your charts, maybe like I would say like a falling channel or something like that. Yes, could be the case. Let me just get rid of this upside line here, no longer needed. So yeah, could be the case, don't get me wrong. I mean, we consider all the possibilities, but again, it's like I said, it's quite interesting, and this is where I'm thinking to overcomplicate your life or not to overcomplicate your life. But basically, here, given that we, for example, we saw a strong move to the upside, and now we started seeing this little drift lower within the falling channel. I want to say that, you know, maybe this little idea here could work out as a possible bullish flag, but again, it's not really ideal. Because we don't have a really like a strong good pull here. We do have a retracement here within a kind of a pattern. So yeah, like I said, I don't want to kind of overcomplicate things here yet. for now, if this is the case, if this could be, let's say, a bullish flag, then we would still need to see a break of the upper side of it. So either way, I mean, all this area right here would still be, classed as a falling channel, and that's why any trading inside here could still overall lead to some downside, because it could drift a little bit lower, find maybe support somewhere around here, and then drift back down. So within the falling channel, as long as it stays within that pattern, there is still hope for the sellers. If, like I said, if it starts breaking this area, the upper side of this falling channel, well, then yeah, maybe we could consider a bit of a move to the upside. Now, Dow Jones Industrial Average. Now, also, if you remember, when I covered Dow Jones, I've said that basically, let's see if this is not going to end up being somewhat of a broadening triangle pattern, and so far so good, I would say. I mean, we're kind of forming something like that, and in general, yes, we did overcome the lower side here, but we stayed within it, the lower side of this potential broadening triangle pattern, but we stayed inside this pattern. I would say keep your eyes on today's trading, because it's going to be quite interesting to see and how Europe is going to trade. Currently the cash index is sitting at around 34,540 zone, so we are somewhere near that 200-day. Yeah, or actually, are we? No, we're just below it, so we're still above the lower side of the broadening triangle. So the question here is, can we drift back above the 200-day EMA? But to be honest, I would actually prefer maybe to see a push above this 34,815 zone in order to maybe consider a bit of a move to the upside. I would initially, in that scenario, I would initially aim for the 21-day EMA or the 100-day EMA, but then yeah, we'll take it just from there. Now jumping into DXY, the dollar index. So nice move yesterday to the upside, and we managed to reach that 50% retracement on the Fibonacci. So yep, we managed to reach that, and we managed to reach this highlighted territory. So now the big question here, what's next? But what I said to you yesterday, that for me to get comfortable with higher levels, I need to see a nice good push, and I would like to see the daily candle remaining above the 50% retracement on the Fibonacci here, and so far you can see that the index is not really, let's say, going anywhere. I mean, it's just sitting below it. We're very close to that hurdle. That hurdle is roughly around that 96.27, something like that area. Yep. So yeah, we're waiting for that push. So let's see how this is going to play out. I think it's more of a, yeah, it's more of a 96.20, actually it's closer to 30 even, so let's round it up nicely here, the 96.30 zone. So if we get a nice pop above it and we stay above it, then yes, I will go for some higher levels. If we struggle with it, maybe we could see a bit of a drift back down here towards the 21-day EMA, and then we'll, of course, we'll just take it from there. But one thing for sure, for now, I'm just gonna keep this Fibonacci levels on these Fibonacci levels on the chart, because like I said, I'm keeping an eye on that 50% retracement. If we do climb over it, then I'll start aiming to the upside again. Gold, look at this. I mean, boom, there we go. Gold was very popular yesterday. The equity world did decline, so everybody was jumping into something a little bit more safer, and of course, kind of the whole kind of all the geopolitical tensions in the world kind of are attracting more buyers into gold. So from the technical side, we can see that the index the commodity drifted nicely to the upside. Yesterday I talked about this potential idea of a rising channel. We managed to break the upper side, as you can see here, and we pushed further north, and we managed to reach the highest point of November. So what's going to happen next here, or what could potentially happen next here, is if it stays somewhere above this upper side of the the rising channel, or even better, it stays above the highest point of November near the 1877 level, then yes, of course, we'll continue aiming higher. We do have some obstacles here, for example, like the highest point of June of last year near the 1916 level, approximately around there, and that's going to be our next potential target if gold remains above the highest point of November. But as you can see, it's the beginning of the day here in Europe, and we are kind of already above this hurdle. So let's see how today's day is going to go further, because again, I don't want to rush into anything. I mean, we did have already quite a steep up move here, so maybe a bit of a retracement could be possible. However, we're not really seeing that retracement yet, so or any signal for possible retracement. So that's why, I mean, I'll remain bullish on this one, but let's say if is this a good entry point? Well, I mean, for me personally, no, because again, I don't like these scenarios, but that it could still go further north. Yes, that there is a good chance if, like I said, we stay above the highest point of November. If we don't, then yeah, I'm just gonna continue observing this one, and maybe we'll get that little retracement. This is where maybe I'll again start bringing up the Fibonacci levels. But for now, I'm just, like I said, I'm observing this one. Jumping into oil, WTI oil. So looking at this picture, here, I mean, we can see that, yes, a beautiful move here to the upside. We managed to reach that 94.89 zone. We also managed to reach that 95.89 level. I spoke about these levels, guys, and well, yeah, it's quite interesting here that we're finally here. We finally reached those levels. I just yesterday talked about this here, the 95.89, and look at where it ended up being. So this is the highest point of September of 2014, guys. To be honest, if this just continues to rally, well, I mean, we could end up just dragging to all the way to that 100 level, or even higher. Well, here, and inflation, here we come. Well, we're already there, but it's already here, but yeah, more inflation, here we come. Right, now then, what could we expect next year? Now, the only little issue here is that I'm currently looking at this, and I don't want to rush into anything yet, because we did already have like that good, move to the upside. Maybe a bit of a corrective move lower could be possible. So I would say, as long as the commodity remains below that 95.89 zone, yes, if it remains below it, then maybe a bit, like I said, a bit of a retracement could be possible. If it doesn't remain below it and jumps nicely above it, then, well, like I said, we'll aim for that 99 zone or even above that. Ethereum, very quickly on that. So okay, I did redraw this a little bit because previously I had this upside line here, and yeah, I would say it was also a bit of a tentative one. So, and this one is also a tentative one. The only thing is that what I like here is a nice, beautiful reversal signal here forming. So yeah, that's something to keep in mind. Of course. It's going to be quite interesting to see if we can go somewhere from here. For now, I am leaning a little bit more towards the upside, as long as we stay above this upside line, newly drawn upside line. And if you do, yeah, then I'll go for some higher levels. Now, jumping into a few pairs, AUD and ZD. So one of my favorite ones, yesterday I talked about this idea here, and I talked about this highlighted territory. I said that we need to see a good strong break above it, and we need to see the daily candle staying above that, the body of the daily candle staying above it, and well, we got some false breakouts here, and now we're seeing a bit of a drift lower. So what's going to happen next? Well, I mean, let's wait and see, because we are still trading above this upside line right here, taken from the low of the 17th of January. We are, yeah, there is still kind of hope for the buyers to step in. But I would say I still need that move above this area, above that 1.0770 zone, and I need to see the daily candle staying above that hurdle in order for me to, go for some higher levels. For now, I'm just observing this one, so let's see what's going to happen next. By the way, if it breaks, of course, the upside line, then yes, we'll start looking at some downside. My only little issue with the downside is, let's say, if we do drop below this upside line, and then let's say we fall also below the low of the 11th of February near the 1.0715 area right here, then yes, we could go lower. However, I'm going to keep a very close eye here on this 21-day EMA, because recently it kind of did its job and did provide good support. So if we do drop below this and then we drop below that 21-day EMA, now that's where it could become a little bit more fun for these sellers. AUDJPY very quickly on this one. So we managed to break the upside line and we managed to fall below the 82.28 zone. Of course, this is leaning a little bit more towards the downside, and especially the fact that the equity world is on the kind of in the selling mode right now. The only thing is, like I said, if, as I mentioned already with the equities, if suddenly those reverse a little bit to the upside, we could see maybe this pair also rebounding from that maybe 200-day EMA and jumping back above all of the EMAs here again. Because what I said to you previously, that if we do break this upside line and we drop below that 82.28 zone, yes, I'll aim for lower levels, but we do have these obstacles, these EMAs. Now, don't get me wrong, I mean, these EMAs recently have not really carried much significance, because we were, as you can see here, they were kind of flat here, and we were just oscillating around those EMAs. So yeah, be very careful with that. Of course, yes, for now I'm leaning slightly to the downside, but I'll get a little bit more comfortable with that idea if we do drop below that 200-day EMA, and then the pair would be placed below all of its EMAs here, and potentially maybe more sellers could join in. Now, something that probably I'm gonna draw here just to keep it here for now is this upside line taken from the low of the 3rd of December, and I'm going to draw this downside line taken from the high of the 5th of January. So that means that we are in a somewhat of a squeeze here. I mean, ideally, of course, I would prefer to see this one maybe drawn from around here somewhere, but it's not really perfect here, and yeah, I mean, it's not really ideal. I mean, it's something like this. I mean, we'll see that the pair did break this downside line here, so it's not really, like I said, it's not really ideal and not really where I would like it to be. So maybe I will rather, maybe, like I said, just draw this downside line for now, because it doesn't matter. This line is tentative. The other one was also tentative. So, it's some kind of it's a bit subjective here. So anyway, for now, looking at this picture, I would say yes, I'm leaning a little bit more towards the downside, but I need that drop below that 200-day EMA in order to aim at least towards the area right here, the current lowest point of February, I think. Is that correct? Oh, sorry, no, that's not. That's the low of the 4th of February, near the 81.30 zone, and slightly below that we do have this upside line. USDJPY. So, okay. I'll have to remove some of the lines here, but anyway, for now I'm gonna keep those. I'm gonna be removing these soon, but for now I'm just gonna keep those. So if you remember, when we had this pair trading in this kind of in between these two lines, the downside one and this upside one, the medium-term upside one, taken from the low of the 6th of January of actually long-term ones taken from the low of the 6th of January of 2021. We managed to break the downside line, we pushed higher, but we struggled with this key resistance level. So let me just put this one on the chart, and there we go, that's the one. So we managed to kind of reach this area. This was a very good barrier. That level was roughly around that 116.35 zone. We failed to kind of break it properly, I would say, and then we drifted back down. But the 21-day EMA did provide good support. support, and now we're kind of approaching this area as well, this upside line taken from the low the 24th of January. So in a way, everything's kind of I would say still somewhat positive on this pair. So if it starts breaking these two short-term trend lines and then falls below the 21-day EMA, now that's where I'm going to get a little bit more excited with the downside. For the I mean, the level that you can keep an eye on here is these recent lows here. The low, the 11th of February. It's near the low of yesterday as well, and that's roughly around that 115 115 zone. So a nice good drop below it, could lead to some lower levels, guys, and we could aim for maybe one of these, the 114.16, or even better, or even further than that. But at the moment, like I said, I'm being very careful because there is still hope for the bulls here, and of course the bears could enjoy the moment if we do drop below that 115 level. USD CAD very quickly. So quick update. Yesterday we had a break, another break here. Sorry, not another, but just a break. But then we drifted back down. So in a way, the same game plan remains. I still need to see that pop, a good pop above the 1.2787 level in order to go for some higher levels. Again, that's the same, like I said, the same analysis is valid. For the downside, I need to see a drop below that 1.2650 territory, somewhere around here, and maybe, depending on where these EMAs are going to be, then maybe actually also a drop below those EMAs, remaining EMAs, then could be quite nice for the sellers. GBP AUD. Okay, so we had a move higher initially, but yesterday we reached the 1.9057 zone, approximately around here. That was yesterday's move. So this is currently the highest point of this week. If you're looking for some upside, wait for that break above this barrier. If you're looking for some downside, then, well, a drop somewhere below this 21-day EMA might do the trick, but then we have this upside line. So in other words, even if we drop below that 21-day EMA, it could drift a little bit lower, but it could find support near this upside line here, taken from the low the 2nd of November, and yeah, maybe a bit of a rebound here could be possible. So something like that could be the case. Again, this is a bit tricky. I would rather, like I said, stick to some of these levels in order to get comfortable with maybe the next short-term directional move. But of course, also, I'm keeping an eye on the current lowest point of February. So at 1.88 zone, roughly around here. So a nice good drop below it, could lead to some lower levels. So keep that in mind. GBP USD. GBP USD still the same thing here. I mean, we're not really doing much. So I am. I'm not going to change my analysis for now. I mean, I'm just going to stick to the same area, 1.3628, something like that, or not exactly this level, but because the more we kind of flirt with this area, the more kind of it changes the levels. I mean, you could keep an eye on the 1.3644 zone. That's kind of one of those more slightly better levels, but also you could keep an eye on the yesterday's high, which is also the current highest point of this week. So that's roughly around that 1.3572. So but here we have the 200-day EMA very close to it, so that's why there is it's a bit of a problem with this level. However, if we clear all that, then yeah, we could go for some higher levels. And finally, Euro USD, guys, beautiful rebound from this downside line. So yep, that's great. Great for the buyers, of course. Can we rebound a little bit more? Again, I don't really like these scenarios, these situations. I mean, for now, I'm just gonna observe the price action on this one. For me, for the downside, I need to see a drop below this 1.1235 level right here. For the upside, I'm very conservative on the upside. I'll take I'll wait for a push above the 1.1483 zone right here, and then yeah, we could go from there. All this area right here, like I said, I just don't like it. I mean, for me, it's not really ideal, and yeah, I mean, could just bounce around here for a little bit, and yeah, and then kind of without any clear indication. If you do like such such areas, of course, it depends on your style of trading, guys. I mean, you always need to do what you are comfortable with. It doesn't matter what I say, what somebody else says, but just you always do what you are comfortable with, guys. And of course, don't forget to have your stop loss in place. So, guys, That's it for this session. I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, guys. I really do. So that really, really helps me. And yeah, thank you very much. I really, like I said, really appreciate that. If you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.